Solana is known obviously for being a monolithic chain where everything is essentially on the L1. The L1 tries to do everything. For stuff like derivatives, I think it's a bit of a different ballgame where if you're trading with leverage, where prices are moving like very quickly, you want to be able to react to that. You want to be able to manage risk. We need to compete not with, existing platforms on Solana. Like, we want to be competing with centralized exchanges. We have to do this consensus around the world. It takes a lot of time, and we can never get essentially as fast as like a Binance or a Bybit. And so we figured there is a good kind of use case here for an L2 on Solana. And for what we're trying to build, essentially, it makes a lot of sense. It's like institutional grade exchange that actually competes with the big players there. But I think if you want to scale to hundreds of trades a second, it definitely makes sense to kind of bring some of that logic.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show spotlights Zeta Markets, the premier derivatives trading protocol on Solana. In this episode, we cover how Zeta plans to release Solana's first Layer 2 scaling solution, how it differentiates as a perps trading protocol, and what's next with the upcoming airdrop and launch of their Z token. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Power up your portfolio by borrowing, lending, and multiplying your favorite assets, made safe and easy by the industry-leading automation tools at SUMMER.FI. SUMMER.FI offers a curated DeFi experience to access the highest quality protocols and strategies. Discover new earn strategies for your portfolio in a user-friendly app designed to filter based on the tokens you hold, the networks you transact on, the protocols you trust, and the highest available yields. Learn more today at SUMMER.FI, the best place to borrow and earn in DeFi. Tired of hopping between tabs, searching for new tokens before the hype catches on? Try MATCHA.XYZ, the DEX aggregator from 0x. Matcha connects hundreds of DEXs so you can trade millions of tokens and find fresh new drops. Matcha works out the best route to save you money on every trade. Swaps are free, and Matcha has everything you need to trade on-chain. Gasless swaps, limit orders, and cross-chain, all in one place. Search Trade Done at matcha.xyz.
Introducing the MANTLE liquid staking protocol, MANTLE LSP, a permissionless, non-custodial ETH liquid staking protocol deployed on Ethereum L1 and governed by MANTLE. With MANTLE LSP, users can stake ETH to instantly receive METH, earn yield and accumulate rewards the longer you stake. METH is the value accumulating receipt token that will give you access to expanded yield opportunities. Stake and watch your yield grow with MANTLE LSP.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, let's introduce Tristan Frizza, the co-founder of Zeta Markets. Tristan, welcome to the Edge Podcast. How are you doing?
Doing great. Thanks for having me on.
So we're here to learn all about Zeta Markets today. And as of this recording, Zeta Markets has done over $6 billion in total trade volume. They have about 108,000 active users based on unique wallets. Given that it's built on Solana, we're actually really excited to learn about the fact that we understand they're building an L2. As far as I know, this could be the first L2 to go live on Solana. So lots of detail to unpack here. So Tristan, why don't we kick off with a little bit more about just who you are as a builder? I guess, what's your background? Like, how did you get into crypto? And tell us about the founding of Zeta Markets.
Sounds good. Yeah, I can dive into that and give you the long and the short. So I got into crypto, I guess, what is it, 7 years now? 2017 feels like actually quite a long time ago. Got into it casually. I think I was mostly just doing a bit of personal trading. That was when I was basically learning to code some basic stuff, building, Python trading bots on Binance and Bittrex and, some of the older exchanges, which was a lot of fun. And that got my toes wet in the crypto space. And so, just working with a couple of friends in that space, got me interested, stoked my curiosity in blockchain technology, and that actually pushed me to do a bunch of my final year university courses in computer science around distributed systems. And so it was really cool because one of my lecturers at the time was actually building this high throughput blockchain for payments, essentially, over in Australia. And so through that course, I dabbled with a bunch of proof of work, proof of stake stuff, consensus algorithms, which I thought was like really interesting. Built my own crappy Bitcoin clone, I guess, in Java or something or other, where it actually had all these like little nodes and would build blocks and basically do like the proof of work algorithm. So it was really cool getting into the nuts and bolts and going from a trading aspect of like, what is this random altcoin that, is mooning 10x, and then actually figuring out what is the tech that powers this whole system. And so seeing kind of Bitcoin and Ethereum go up was super interesting. And then I guess I took a bit of a pause because, like most people, I guess the market crashed and all my gains that I made through that period just got absolutely nuked. So I took a bit of a break from crypto. I'd been doing kind of software engineering, was quite into like machine learning and AI for a couple of years at that point. So I actually did my thesis on like generative AI. So the stuff that's all hot now, I did kind of like at least 5 years ago, all around like computer vision. It was really cool. Got that published in kind of academia. So I started doing that research path, found that like very nerdy, very interesting, getting into the details, which I kind of loved. And then I went and worked in Silicon Valley for like 2 years out of graduation, mostly doing data science, a lot of like personalization algorithms, prediction models, stuff like that. Like that, but then it was like COVID. So I did 2 years of mostly kind of, remote work and stuff like that. It was a bit of a pain. I got a bit burnt out and I was like, I want to go back to startup land. I want to go back to building rather than managing people and interns and stuff like that. And so I started listening to a bunch of podcasts to get inspired again. And I heard, Vitalik talking all about smart contracts and DeFi and what's been happening. And I completely missed this DeFi summer wave, which I kind of regretted. And then I started getting in, I started watching a bunch of videos, started reading a bunch of blogs essentially on how Uniswap and these other things work. And it just blew my mind that this Uniswap Solidity contract with 70 lines of code is just, transacting billions of dollars a day. I was like, this is nuts what people can build. And the logic was pretty straightforward, I guess. It's just like X, Y, K. So I thought we can build some really cool stuff. It was super interesting. And so I decided like, let's give this a crack. And so I just took some of my spare time and started hacking around, I guess, on Ethereum, learned Solidity literally over Christmas. I had nothing better to do. Didn't want to spend time necessarily with my family, which is pretty sad. And I just spent it in my room learning Solidity. And then very soon realized that we wanted to build this basically derivatives protocol. We started wanting to build options and we saw what was out there on Ethereum. There were some kind of early protocols, but they had extremely high fees and, massive slippage and all these kind of problems. And so we started building that. We realized this is not going to scale. And so we very quickly, I think, looked at Solana and saw the kind of numbers that they were throwing out with 50,000 transactions per second and whatnot. And then we thought, hey, this is pretty cool. There's a new network. Let's give this a crack. Managed to get, on the phone with Anatoly very early when he was just trying to get devs onto the chain, basically just called him the next day. And we just nerded out about elliptic curves and, hash functions and all these different things. And I was like, I like this. This is pretty cool. I've always wanted to learn Rust. So we got into that essentially. And I enrolled in the second ever, I think, Solana hackathon. Basically quit my job that day, slept on my co-founder's couch for the next 3 weeks. And we basically built out like a really crappy options proof of concept thing on Solana DevNet. And we ended up winning that hackathon. And that was basically the start of Zeta. That was our kind of initial product. So we actually started in early 2021. So I'm going to correct you. We've been around for like 3 years on Solana. So like quite an OG protocol. We were there around the time of like Serum and Radium. There was basically nothing on Solana at the time. So we've been building there for a long time. And yeah, we've come a long way since then when there was nothing there. No dev tooling, no nothing, no liquidity. And now obviously Solana is a completely different ballgame.
One thing I noticed looking at the DeFi Llama trading volumes for different derivatives exchanges, one thing that really shocked me is that while Zeta has been doing about 100 million per day in 24-hour trade volume, I was looking at Drift, And, Drift is, let's say today it's around 130 million. And then Jupiter is around like 400 million. And so it's just shocking to me that we've got yet another like fierce contender in this space. So just credit to you guys for continuing to build. And again, this is part of what prompted the interview today, is we're just excited to understand like what's the secret sauce here? Like why are they continuing to grow? And this is without a token live. We're also going to cover that as well.
Yeah, maybe let's just jump right into what is Zeta Markets. Tristan, if you had like an elevator pitch that you give to people to explain it, would love to hear that.
Sounds good. So Zeta is basically our vision for a cutting edge decentralized perps exchange, and it's built on Solana. We've been building on Solana, like I mentioned, for the last 3 years, and we've hit some pretty amazing milestones, like we mentioned earlier. So 6 billion in trading volume. We're averaging about, 100 mil in trading volume a day, and, likely to see that grow. It's already been growing quite a lot if you look at DeFi Llama over the last couple of months. We actually have quite a lot of users kind of, I guess, in the lead up to this kind of token launch, and, the platform obviously doing very well. We actually cracked 100,000 monthly active users, so that's been super exciting to see the growth. And so what's the goal of what we're trying to build? We've always wanted to create DeFi that actually scales to real world adoption. A lot of apps out there are kind of clunky to use, very expensive. I really don't see average people coming in and potentially onboarding onto these apps and using them at scale. So that's basically what I experienced with a lot of early DeFi that I played around with. It was huge spreads, fully collateralized or over collateralized DeFi, and then kind of crazy high gas fees that just price out like the average user. And so Zeta was born out of a need to create this derivatives exchange that basically feels like a centralized exchange, but runs entirely on a public blockchain. And so that's really trying to get the best of both worlds, where you don't have the rug risk of something like FTX, which a lot of us got burnt in, but then you don't also have this like super clunky DeFi protocol. It's something that doesn't compromise on UX and performance, but you can kind of check anything on the blockchain. You can check any transaction or action that happens there. You can self-custody, you can withdraw at any time. And so some of the unique stuff that we've done, which is really cool that no one has really done before, or we were a pioneer on, was building like a fully on-chain central limit order book. This was initially kind of pioneered by ETHEREUM, and we took that essentially and built a derivatives kind of framework, added leverage and did stuff like that. So we're a big kind of order book maxis. We believe that's basically what's permeated through traditional finance, and there's a good reason for that. AMMs have obviously worked really well in this kind of low TPS regime, where you can't like rapidly update, I guess, orders and prices, but you obviously have these kind of negative consequences, such as like slippage and impermanent loss and things like that. So we try and solve that through our model. And because we're built on Solana, I think it just opens up the design space in terms of you can build some really compelling experiences. So our order placement is basically the block time on Solana, so 400 milliseconds. So if you were to go into our exchange, place an order, this is doing it fully on chain, and within a second, your order's basically been placed and executed on the network. I think to the average retail user, that kind of feels like a Robinhood or a fintech app, or even a kind of Binance. I don't think people notice the difference between maybe like 100 milliseconds and a second. And then, the other thing that's really cool is gas fees are actually really low. That's always the thing that compelled me to use Solana, as someone who wasn't like a massive ETH whale or something, or like coming in that could spend hundreds of dollars on gas fees. I was like, it's great. I can just open an account on Zeta. It costs like $1 or something or other, or probably less. And then to place trades is just like, rounding errors, fractions of a cent, which I think is really cool.
Tristan, so essentially you were trying with the CLOB setup, you were trying to create extremely fast execution with, I guess, low spreads. Is that kind of like the main differentiators between maybe like the AMM style model and the CLOB model? Does that make sense, or is there anything else that you would add to that?
Yeah, that's a big one. So I guess AMM's more focused on passive liquidity. You're basically putting it in like a two-sided vault in these kind of spot AMM cases, or in some of these derivatives AMMs, they leverage this virtual AMM, kind of doesn't have this collateral, or it tends to be kind of one-sided. So yeah, that's kind of a big difference, is the pricing you tend to get on there is not that great. And it also just tends to get arbed like crazy on kind of dexes. You notice a lot of firms will set up, or people will run arb bots, and you tend to see that if you look at the markouts, I think on a lot of Uniswap Profit, as well as probably other AMMs, people have modeled that out and seen that LPs just get absolutely fleeced for this kind of stuff. Like it's just like a losing bet. You're just losing money over time. There's kind of no profit there. And even the fees that the protocol generates doesn't tend to kind of subsidize that effectively. Whereas for us, it's a lot more like a Binance or something or other, where we work with kind of professional or semi-professional market makers to come into the platform. They basically update their quotes and orders, very rapidly on chain. And so you don't have this AMM getting arbed against, the kind of Binance price leader. We can kind of update quotes all the time very quickly within, 400 milliseconds, which, is not perfect. So we have to have slightly wider spreads in centralized exchanges, but is still pretty good and much better than the status quo, I would say.
And then just curious how, Solana's gone through a bit of congestion issues, depending on when people listen to this. I don't even know if they're over or kind of rectified yet, but I guess how has that impacted your users? And then what are kind of like the plans around that for Solana as a chain to address these issues?
Yeah, that's a great question. Something that's definitely been top of mind probably the last month or two. I mean, back in the day, to give some context, Solana had some real growing pains, unfortunately, and we bore the brunt of those, being kind of an upstart exchange going through that first wave of Solana. We were doing pretty well. We were building an options protocol essentially before we pivoted to perps. So we had all this options, open interest on our exchange, and then suddenly Solana would go down and we're like, well, what do we do with all these kind of open positions? And that kind of caused some risk or kind of concerns on the platform. And so that was really annoying, dealing with a chain that actually went down several times a year. It obviously got a lot of FUD. I think it really held back the network and kind of subdued the impression in the narrative of Solana as the 9 to 5 chain, the chain that, FTX or SBF could just switch off at will, which is definitely not the case, but, people love to meme that. So that's kind of how it was back in the day. It was a real kind of, I wouldn't say it's a struggle, but it definitely had some of these growing pains that made it hard with the kind of uptime. It's gotten way better. Like they went into like full adversarial testing mode and just robustness, and just really, they realized like if we go down 1 or 2 more times, I think everyone would just lose hope. Like all the devs were just like, this is the 5th time it's gone down this year. Like we can't build on this chain anymore if the liveness is so bad. So they really like pulled it out of the bag, I think the last year or two, which has been great to see, just like a lot more, rigor with the engineering. But the recent issues, I think definitely also affected us a lot. These have been for altogether like different reason. So part of it is like the networking stack is kind of having issues on the Solana side. So some of the implementations for what's called their like quick networking protocol, this is actually like a anti-spam prevention thing. So when you're kind of firing around your transactions through the network, some people were doing this cheeky stuff back in the day where you just basically DDoS the leader and you just send it like millions of packets, and then it would just get flooded, and it just like, you wouldn't be able to basically run the network, or it just made a lot of problems. So now it kind of filters out and it realizes what is spammy and how do we kind of filter that out, and how do we rate limit, I guess, these very spammy incoming connections. Problem is like some of the implementation details from some of the packages I know like had some issues at scale, didn't kind of work quite as expected. So I think they're kind of fixing those. So there've been quite a lot of improvements there. But it's led to this situation where now if you want to get things into the network and they're getting dropped, you just basically have to like continue to like spam and hit all the nodes and just kind of cause congestion for no reason. And so it kind of blocks up the network. So something that they've been doing, which is really good to see, is this stake-weighted quality of service stuff. So this means that the actual stake for validators on the network is used for kind of bandwidth in sending these transactions. So the leader will have, I think, 80% of its kind of incoming ports for these transactions for nodes with very high stake weight. So it doesn't mean that I can just spin up a very low or no stake kind of connection and I can just like send millions of packets to this thing and just like, spam the leader. It means that a lot of the kind of incoming connections are coming through trusted validators and people with a lot higher kind of economic incentives and stake. So that's definitely helped as like a short-term solution to, I think, reduce the spam and kind of route through, I guess, some of the existing big validators and kind of RPC providers. So we've already seen the transactions are landing a lot better. Like basically the issue was you would send an order on Zeta, it would start, the spinner would be going, it would submit it to the network, and it wouldn't even fail. It wouldn't even hit the leader. It would just disappear into the ether, just because it just kind of drops off the network, because the leader is just so flooded with incoming messages. So that's already gotten a lot better. And then on our side, some of the improvements that we made, which are really great, we realized Solana is going to take a bit of time to go and fix all this kind of stuff. It's kind of like a gargantuan effort in some areas. So we thought, what can we do? Let's shave down, optimize our smart contract a bunch. So that's what we did. Our matching engine, we figured out, hey, some market makers are placing like 8 quotes at once. Maybe we can do our margin check once in like a batch instead of doing it for like every single order. So stuff like that just really shaved down the compute on our smart contract. And by shaving down the compute, the Solana runtime's got to run it. If it's more lean, it doesn't kind of block, I guess, execution for everyone else, and it just means it gets included a lot better in the network. So that was really good. We saw massive improvements from that, and I think I wrote some tweets on it. People were like, people from Solana Core were like, this is great. Like, we're trying to optimize stuff on the protocol layer, and these kind of DeFi devs are going and they're optimizing the apps that are on top of that. So it's like, it's like hand in hand. We're helping kind of improve the network there. So that was a big one, just shaving down the contract. And then the second one was just like infrastructure redundancy, just like working with more kind of diversified RPC providers, and then doing this thing where we kind of relay to kind of more nodes than just kind of like the 1 or 2 that we were running initially. And then another thing that's been great is like Jito, for some reason, just works incredibly well. So Jito is the kind of MEV network that's been built on Solana. Their kind of RPC just like seems to land transactions incredibly well. So we've been using them a lot more for like our critical backend infrastructure. Like we've got to basically process events in our matching engine. So if that goes down or that kind of gets halted for a period of time, people basically can't trade, which is a problem. So we just need to make sure that that's turning over. And so we kind of pay a bit more in terms of the fees and the tips to make that go. And we might be adding that to the front end just to kind of get things through faster. So that's on our side. And then the last bit that I'll mention that hasn't come out yet on the Solana side, which is pretty excited and has a lot of people waiting for, is this Solana 1.18 upgrade. I think it's coming like this month. Should be on mainnet like with majority stake by end of the month. But this fixes the issue with the scheduler and some of the fee markets. So Solana is known for this local fee market. It is essentially like how state is contended for. And the problem right now is you might send a really high priority fee and just be like, I want to get my thing in. Solana is really congested right now, but I've got this liquidation going down. I want to grab this. And so you'll send this very high priority fee, and then you might just not even land in the block at all. And someone with half your priority fee or like a fraction of your priority fee somehow gets in, and you kind of put your heads in the air and you're like, how is this happening? How is this guy getting ahead of me? And the issue with Solana's scheduler is because it's parallel and multi-threaded, and I won't get into the details, but you're basically executing potentially these 2 transactions in parallel, and they're also being scheduled in parallel, unfortunately. So it means that they're not like consistent. So these 2 things don't really talk to each other. And so depending on what your fees are between these 2 threads, you might actually get into the block with lower fees. So it's just kind of this weird inconsistency thing where you might pay high priority fees and not get included, or get included behind other people. So they're basically trying to roll that out so things on the fee market side are much more predictable. If you obviously look at ETH, you pay the high fee. People look at that in the mempool and they obviously include you in the block. Solana's got this kind of jitter or this annoyance right now where it makes it pretty hard for protocol devs and users to actually predict what fees to use.
Tristan, I know when ETH mainnet was as congested as it was in like 2020, 2021, when it would become that congested and it was difficult to transact, I mean, it was just a game of like, how much were you willing to pay in gas? We would just see a drop off of users. It was almost like, it was like the parent coming into the room and putting the kids in order. And so what would happen is all of the degenerate behavior would like die down for a bit. And I'm not going to pretend like it was a pleasant experience, but there was like a self-healing to the network by folks just not transacting. I wouldn't be aware of this, but have you been monitoring on-chain with Zeta users or just DeFi users in general on Solana? Have we seen similar drop-offs with the congestion issues pending this major fix that's coming that you just alluded to?
Yeah, that's a really good question. So back in the day, there would be like an NFT mint or a Radium IDO, and it would bring down the chain. That obviously just culled a bunch of users because the chain was unusable and had a bunch of downtime. More recently, I guess it's cool once they actually launched this fee market, which was meant to address a bunch of these issues. Like I remember, where was I? It was like last year, there was like the Mad Lads mint or something or other, which was like a massively awaited NFT mint with like tens of thousands of people just like DDoSing the hell out of their, out of their contract to try and get in there. And that thing went off without a hitch. Like the whole thing minted out within like seconds or something or other. And it was funny. I went and checked in my dashboard for like failed transactions on Zeta, which is like the big thing, right? Back in the day, there was no state isolation, no local fee market. So NFT mint that goes off basically nukes all of DeFi on the rest of the chain, which is not what you want, right? So local fee markets were meant to improve that. And so we saw this massively hyped NFT mint go off. And on our kind of metrics, there was just basically like a tiny blip, basically insignificant on any of our metrics. And I remember I shared that out on Twitter and like totally quote tweeted, and he's like, this is what we've been building for. Like, this is incredible that, we've finally got some of this isolation. So that was a really positive sign to see. More recently, I would say, with this network stack quick kind of issues, that definitely had some impact on the numbers. You obviously saw Jupiter come out. There was like a ton of hype, and then the network started getting really congested because there's like a lot of ARB bots, a lot of spam, like a lot of stuff happening. A lot of people just trying to like farm airdrops and do whatnot. And then, we started having these congestion issues, a lot of network stuff being dropped. We definitely saw our users drop. There was a particular week, I think it was probably a month and a bit ago, that our user numbers just literally halved because firstly, like we didn't have the fees set high enough on our platform, and plus just transaction landing rates went from like near 100% to like 10% in the space of like a week or two, essentially. Just because suddenly this kind of black swan event of all your transactions getting dropped, and no one knew why it was happening. No one suspected that it was a network thing. Everyone's like, it's an economic thing. You need to set the fees higher, but they didn't realize there was like a bunch of bugs. And then that kind of messed a lot of protocols up. And then we were just scrabbling over the weekend, essentially to just be like, how do we onboard more RPCs and send more transactions and relay it more and try and get the number up? Because it was a terrible week where you would send things and like 1 in 5 transactions would actually get on chain. And so people were just yelling at us in customer support tickets. They're like, I have this position on, I'm trying to close it out, and I'm just spamming, just trying to like get my order to close, and it's just like disappearing from the network. And I was like pulling my hair out. I'm like, what's going on? How do we fix this? And, we had to push out a bunch of like really quick fixes. So it was never fun, but things have improved a lot since then. So I'm very glad to see that.
DeFi enables a whole new world of trading and yield opportunities. Sometimes we all wish we had a little bit bigger of a budget so we can make the most out of it. That's why we created Blueberry. Blueberry lets you access the best opportunities on Ethereum all in one easy-to-use terminal. You can access 5x, 10x, or even 20x your money in one click, more than any other lending market, so you can maximize your earnings. Only on Blueberry.
Okay, so as much as I want to ask you more about like the specs around trading on Zeta, and I think we'll get to that here in just a bit, we got to talk then about how has this led to you building an L2 for Solana? Like, how would this work? It was somewhat of a surprise to me, only because I think like one of the reasons we hear users rave about using DeFi on Solana is that it's all in one place versus the fragmentation of like all the different roll-ups or L2s that are built on Ethereum. And while there's solutions that are coming there to help fix that fragmentation, I've always acknowledged this has been an enormous differentiator for the UX on Solana. So that said, I think you've laid out a lot of the reasons, of course, why this makes sense already. So I guess what more can you share or expand upon in terms of building what could be Solana's first L2 to go live?
Yeah, it's a really great question. I guess some parts of it maybe go or are slightly counterintuitive or go against common knowledge. So Solana is known obviously for being a monolithic chain where everything is essentially on the L1. The L1 tries to do everything. I think that's very reasonable. I mean, I've been a huge believer of that and still obviously am and will continue to be. I think it makes a ton of sense for a lot of use cases. Stuff like Spot, I think is such a no-brainer. Like look at Jupiter. It's got, probably 10 plus AMMs and CLOBs under the hood for all their spot stuff, aggregates it all. You wouldn't be able to do that with cross-chain as far as I'm aware, and doing kind of fragmented app chains and L2s. Like that would just be like a impossible task. So it's kind of beautiful, the composability and being able to tap into the same source of liquidity and use all these platforms under the hood. So spot, staking, lending, I think make a ton of sense on the L1 because composability is really important, and maybe the time sensitivity is not so crazy in those kind of use cases. For stuff like derivatives, I think it's a bit of a different ball game where if you're trading with leverage, where prices are moving like very quickly, you want to be able to react to that. You want to be able to manage risk and do stuff like that. So that's what's pushed us in the direction of we need to compete not with existing platforms on Solana. Like we want to be competing with centralized exchanges, and we are running essentially where we have to do this consensus around the world. It takes a lot of time, and we can never get essentially as fast as like a Binance or a Bybit. And so we figured there is a good kind of use case here for an L2 on Solana, and that would be something for perps. We believe there's maybe not as much composability for a perps product. I mean, maybe eventually there will be, but we haven't seen it so much to date. If you look at DYDX, they're going fully down the app chain route, and I can kind of see that they're prioritizing liquidity, they're prioritizing performance, and I think that's where kind of an app chain or an L2 kind of makes sense. The reason why we didn't go down like a full app chain route is, one, personally, we really love Solana. Two, we think it's just going to be a hub for DeFi and liquidity, so being built on top of that, I think makes a lot of sense. Whereas if you have to go and build some like discrete app chain, it's going to be very hard to bootstrap and get adoption there. The cool thing with Solana, because already the L1 is very fast, we're pretty confident we can get the L2. I mean, it obviously scales the L1, but by the L1 being very fast, the L2 should be extremely performant. I think with Ethereum, obviously, it's kind of built on a slightly slower L1. So the kind of L2 there will definitely be, you've seen with some of these OP stack kind of chains, you have very high, data availability costs, and, settlement kind of takes a bit of time, and especially the bridging, I think, after these L2s can be quite slow. But from some of the design work we've been doing, I think we can get much faster on that. Should be much faster, much cheaper. The bridging experience, I think, should be pretty quick. I don't want to like commit to numbers, but I imagine we could do it, within Solana finality, which is like, 15 to 30 seconds. So I think those things are pretty cool. And for what we're trying to build, essentially, it makes a lot of sense. It's like institutional grade exchange that actually competes with the big players there. So liquidity is really important. Market makers care a lot about being able to update and adjust their quotes in real time. So even though 400 milliseconds on Solana sounds really fast, that is like a lifetime in HFT market making space. These guys are talking about, bare milliseconds essentially. To place orders on Binance, it's like 20 milliseconds. And then also for like scalability wise, we've seen some of the kind of throughput on Solana. I guess the real TPS is probably like a couple of hundred, which is still pretty good. And I think at the current level of DeFi adoption in our platform, we probably wouldn't saturate that for a while now. But I think if you want to scale to hundreds of trades a second, it definitely makes sense to kind of bring some of that logic into the rollup. The other thing is like gasless quoting. I think that's a pain that some of our kind of liquidity providers have been finding. It's like, it's pretty cheap to quote on Solana, but when you're quoting like once a second over like the period of weeks, like you're probably racking up thousands of dollars in terms of like on-chain fees, and that actually factors into your P&L at the end of the day. So being able to like take that out of the equation is really nice. And then the other thing is, I guess we have some runtime, constraints that we have to work around. It's always been an annoying thing building a smart contract. You have account limits and compute limits and all these other things. And if you want to build a platform that has 100 different assets, all cross-margin, kind of like a centralized exchange would, that's very hard, I think, to do in the current runtime constraints. So just having a lot more flexibility around the margin engine, making it a lot more reliable, making liquidations go off like really quickly and efficiently, where we don't have to deal with congestion and NFT mint or other thing congestion, or just generally, Solana being slow, or the, gas fees being really high, kind of blocking liquidations or kind of de-risking of the platform. That's definitely like something that we want to avoid. And yeah, I think that's the last thing, is just the block space isolation, not having downtime, having a bit more control outside of that, I think is really nice. I think that's always like a worry in our mind. Like if Solana goes down again and we're dealing with like hundreds of millions of dollars on our chain, like is that something that we're like prepared to deal with? And that's kind of like a scary outcome where the kind of that kind of layer just suddenly goes down on you. So you can kind of survive, I guess, a little bit on the L2, like it still has to kind of synchronize. And there will be this kind of like period, but I think we just get some kind of better guarantees and a bit more control around the design space and what we can build.
Tristan, you pretty much answered all my questions. I was going to ask you kind of more about how this impacts like the UI, UX. I think you nailed most of them. A few outliers that I'm still thinking of, like whenever I see teams do this, like kind of move to that app chain or like their own L2, I just always kind of think like they get that much closer to their customers. I don't know if you feel that way too, but they kind of, and then just obviously have more control over their own environment. But I'm also just curious, like just the extra monetary lift on your side for Zeta, because right now you enjoy the benefits of Solana without, having to carry the cost of all the infrastructure. So you mentioned kind of the gasless transactions and paying for that kind of like, extra user experience that people will for sure love. But like what other carry costs are there for you as an app moving into, carrying the overhead of your own chain essentially?
Yeah, it's a good question. I think the main ones usually for these rollups come into like the data availability costs. So basically kind of like posting the state down there that can be verified. That tends to be really expensive if you're dealing with like Ethereum pre-EIP 4844. I think like incredibly expensive to run some of these chains. That's why you see Arbitrum and stuff go to designs such as these like data availability committees, which are kind of like these like trusted committees. That's why people like Celestia and EigenLayer, I think they kind of scale things a lot better and make it a lot cheaper. The nice thing I think is Solana is very cheap for block space. And so I think a lot of people have actually thought like this is a pretty decent candidate for data availability and will be quite scalable. I think for the kind of throughput that we're doing, it definitely won't be a negligible cost. Like there will be something there, but I don't think it's something that's going to break the bank. And it's definitely something that we can stomach. So I think that's one of the main ones. And then, yeah, we would definitely aim to improve the UX. Like I think a big thing for us, we're still kind of debating exactly how it would work, but we can definitely subsidize, I think, a lot of the gas costs on the chain, which I think would be really nice. I know Jupiter team have been talking all about like doing a gasless relayer, I think, and then basically abstracting away gas costs for users. That's obviously a big thing on Ethereum as well, with kind of account abstraction and being able to take that out of the picture. I think if we could get rid of that, like that would be incredible. That was like a big friction thing. I've got some of my normie friends to trade on our exchange, and it was funny to see the experience of like, they log into the website and they're like, okay, how do I use this thing? I'm like, okay, you need to go download a Phantom wallet. And they're like, okay, I did that. And they're like, now I need Sol. And they're like, where do I get the Sol from? And I'm like, okay, you got to go to a centralized exchange. And then now you're back in a centralized land. So I'm like, this is not great. So I have to send them, Sol from my wallet. And so getting that initially, I think is quite painful. So if we can abstract that would obviously be pretty good. And then the other thing that I think is really incredible from the UX point that actually really pains me with our current platform, unfortunately something that we can't get around, is just needing to sign every transaction. It's really hard when you're an exchange, and especially when prices are moving quickly. Like our order book updates in real time because we like stream everything live, basically like intra-block from validators. So this thing is updating really quickly. And people will see a price and they're like, I wanna snipe that thing. I wanna grab Sol at $100 as a Wix or something like that. But then, wallet modal pops up, the thing does transaction simulation, you got to approve it essentially, and then it gets sent and then it executes. So it definitely adds a couple of seconds delay, which kind of sucks. And that's something that we can't circumvent other than basically like asking Phantom or Soulflare or whatever to do auto approve. But then there's like a security risk there in that you're just kind of blind signing every transaction through your wallet, which I also don't like. So if we can do something like session keys, I've seen some of these other kind of perp exchanges do this, and I think the UX there it starts to feel like a centralized exchange. You see the price, click on it in the order book, boom, select your trade, go for it. So that's what we're trying to build towards.
Yeah, I personally love that. I've been doing a lot of trading on Hyperliquid, and I sometimes forget I'm even, using a blockchain, to be honest. And I think, that's where you want to be, right? Like, again, I do the session key thing, and just, everything's just gasless transactions. It's pretty sweet. Tristan, I can imagine meme coins are a massive market. I'm assuming you think about meme coins a lot. And one of the things I've been thinking about with these perp exchanges is just what are the risks to quickly listing emergent and popular meme coins? As degen as this probably is, I sometimes wish you could actually get leverage on some of these things when you see kind of like that meteoric rise happening. Maybe it's best that I don't have that ability, but I'm just curious, as somebody who's like engineering all this behind the scenes, what are the limitations to doing things like this, if that makes sense?
Yeah, it's a good question. I will unfortunately be a bit of a buzzkill here and dampen your enthusiasm. So I think, yeah, meme coins are super interesting. I think on the spot side, they're great because you can kind of just launch a Radium pool and you can launch any token and it's permissionless and you can trade it however you want. So people obviously have loved to do that. You know, I haven't launched any myself, but I've bought into some of the bigger ones and unfortunately probably lost money on my fair share of them. So I've taken a bit of a break on that. In terms of the derivative stuff, so it's pretty interesting. We've been more on the cautious side. So I think we take quite a strong approach to like risk management and security. We've actually seen, I guess, a bunch of other Solana projects, not going to name names, but like most of the other major derivatives protocols outside of us did get like exploited or, you know, have kind of serious issues back in the day. And a lot of those, you know, like the Mango Markets one, I think is one to point out. They basically margined their own platform in their native token, which was super thin liquidity token. And so people were able to basically manipulate the market there, drive up the price, and then just borrow like a ridiculous amount on their own token. We never did that. We did everything in USDC because we just wanted things to be kind of predictable and safe. And thank God we did, obviously. So we saw that kind of play out and like feel terrible for the team. But that was like a big design thing in our mind that we didn't want to go down the route of. So we were just kind of very worried, I guess, when it's multi-collateral, when you're using collateral for like different assets, especially non-stables, as well as just listing markets that are very volatile in a cross-margin engine environment. You know, if you're doing isolated margin, great, you know, the thing kind of blows up and whatever, and the kind of risk is isolated to that pool. But in the case of some other protocols, they essentially listed Luna perps, and then Luna basically went to zero, right? And so their virtual AMM kind of depegged or had a bunch of pricing issues, and that market essentially blew out the insurance fund on the entire platform. So that was another kind of example that we saw in our mind as something that we wanted to kind of mitigate risk on. So we've taken a cautious approach. You know, we could theoretically list any meme coin that had like a Pyth Oracle because that's how you get the mark price. But I think that kind of onboards a lot of risk onto the platform. That will kind of spread contagion, I guess, to other markets. So we've tried not to do that. That being said, we know people want to trade some of these coins, and there's definitely like a latent interest in some of these more volatile assets. So we've taken an approach to stuff that's at least within the top 100 on CoinGecko. We feel like there's reasonable liquidity and it's hard to market manipulate. So stuff like Bonk, stuff like WIF, these ones are a bit more degenerate, but they have sufficient liquidity, and we feel like they have, you know, enough of a kind of stable profile that you know, we don't think that they're going to go crazy. We also manage some of the, I guess, risk parameters in terms of like the leverage. So on Solana, you know, we can offer up to 20x leverage, say, but on some of the meme coins like WIF, we're only offer like 4x because these things can move very quickly. I guess if the thing, I would say depegs, but like goes down and say it goes to like close to zero, you can have these situations where the platform, especially because there's leverage in it, you can't liquidate these positions quickly enough. And so the platform takes on a bunch of bad debt, essentially. And then the way that gets resolved is it comes out of the insurance fund, which means basically the protocol itself is losing a bunch of money and paying out for customers. And then if the insurance fund goes out, then you're dipping into like socialized loss. So that's the situation we never want to hit, and we've never hit, thank God. And so that's because I think we've taken this like proactive approach to risk. But yeah, I definitely think there is interest in doing some of these meme coin markets. I think it's just like pretty risky when you get to the derivative side because people are starting to go with like massive leverage, and these things can move, as you've seen. You know, maybe there's an Ansem tweet that goes out, the thing within a minute has pumped like 30%. You know, that kind of stuff I think is like pretty scary for like a DeFi protocol to grapple with.
Tristan, I want to just run through some rapid fire questions for folks that want to get started with Zeta. So as a trader, let's assume I already have a Solana wallet like Backpack or Phantom. I go to Zeta.Markets. I log into the app, basically connect to my wallet. And first off, what is the accepted collateral that I can trade against?
Yeah, it's USDC at the moment, but in a month or two, we're going to support, it's going to be Solana, Jito Sol, or any of these liquid Sol staking derivatives as well. But in the meantime, we've kind of got a Band-Aid solution, which is we've integrated a Jupiter swap. So if you take your Solana in the deposit flow, we actually kind of swap it under the hood to USDC. So you don't actually have to tab out. It's all seamless.
Very cool. Yeah, that definitely solves a bottleneck there. What about leverage? On average, how much leverage is available for most trading pairs?
So I think on the more major side, we go up to 20x, and then on the more kind of risky meme coin side, I guess we take it down a notch to about 4x.
For traders, do you have take profit orders, stop losses, all the sort of stuff that we enjoy on like a centralized exchange?
Yeah, we have quite a suite of those things. So there's, take profit, stop loss, and then we have kind of more advanced order types. So like immediate or cancel, fill or kill, time and force, all these ones for those more advanced traders.
Last question. This is a closed order book, so we just have makers and takers. Or can you correct me, is there any sort of liquidity pool to deposit into? Is there any sort of LP opportunity for folks that aren't traders?
Yeah, at the moment we don't have that, although we do want to add vaults at some point in the future. Definitely, I think the DeFi audience loves these passive LP strategies. You can kind of run, I guess, some of your own delta neutral or hedge strategies, which I think has actually been quite a profitable strategy for people. So people are familiar with funding rates and basis trades. That's a big thing on perps. Sometimes perps trade above or below what the spot price trades. So a lot of the time, the perp price is high because people are, tend to be net long and a bit degen. So for that reason, the funding payment, you actually get paid to get short. So if you short on Zeta where the funding rate is pretty high, and then you would long it on kind of another perp exchange or potentially a spot exchange or a centralized exchange, you would actually kind of just earn the kind of the basis there. So that's kind of one kind of passive strategy that you can do. But for the most part, it's basically like a centralized exchange. You have an order book. There's makers and takers. You can place market orders. You can place limit orders. And yeah, eventually, I hope to run some kind of automated strategies and stuff like that. That's the cool thing about the order book is you can stack things like an AMM on top of the order book. And I think there have been other protocols that have done that to great effect. That will probably be coming in Q3, or at least with the roll-ups, that's going to be a big part of it.
Hey, Tristan, what can you tell us about the Z token? I don't know if you can share possibly when people can expect that token going live. And then just clicking around the platform, I see there's something called Z Score. Maybe tell us what that is. I'm assuming it's your point system.
Yeah, that's right. So Z-Score is basically our take on the point system. We launched it at the end of last year around kind of breakpoint time. The market started picking up around that point. I think that was a big driver of success. Obviously, people are pretty bullish the platform and, the kind of upcoming token launch. So people are quite excited. And it's a great way to tease out, I guess, the power users of the platform. So it's mostly based on trading volume, but also P&L. So people that come in and trade a bunch and kind of really get engaged with the platform and also trade profitably, those people will be top of the leaderboard. They'll not only be, I guess, generating P&L in their account, but they'll also be kind of earning these points, which I think is kind of a nice sweetener to that. And so that leads into, I guess, the token launch, which will be coming this quarter and probably sooner than people actually expect. And so that Z-Score that we have will actually correlate into how we do some of the distribution to our power users through this kind of airdrop model. The token itself will have a few different properties where we're basically basing the tokenomics around this vote escrow model. This was kind of pioneered by the Curve team back in the day. So the longer you stake your tokens, you actually get kind of outsized voting power and rights through that. So that incentivizes long-term alignment with the protocol. So we want people coming in, trading on the platform a bunch, earning pretty healthy airdrop, and then going and staking that into the protocol and, being long-term aligned with the platform. And we're going to continue to reward people for that. So not only does the token and vote escrowing staking give you governance rights, we're also going to be running like a pretty healthy incentives program over the next couple of years of the platform. It's kind of reminiscent of DYDX and some of these other platforms. So, we got this like points IOU system, I guess, going before the token, but that's not the end of it. That's actually kind of the start of a long running program where the more you trade on the platform, essentially, your kind of pro rata volume on the platform, that will go towards incentives and emissions, that we'll be giving back. And that pot is pretty big. It's like 30% of the total supply we'll be giving out essentially over the next couple of years for people who trade on the platform. So it's a great way to essentially get people in there trading, racking up their kind of score, and then we end up giving up, a third of the entire token supply out to the community just for these trading rewards, outside of airdrop and other kind of allocations. So yeah, the airdrop's going to be 10%, largely based on the Z score, and then there will be kind of like a second component to that airdrop, which will essentially be the vote escrow kind of staking mechanic. So, you can kind of take your airdrop and you can go sell it, and that's fine. But I think we really want to reward the diamond hands, people who take the airdrop, they go and stake it, they stay long term aligned, keep trading on the platform. Those people that I think will double down, and I think they'll be having a very healthy reward for that.
It's still wild to me that the voting escrow token model, it's one of the few things that was born in DeFi Summer that has thrived since then. There's a lot of ideas that have been tried there and failed, but I'm in love with that model as well. I think it perfectly aligns the interests of the protocol with token holders. So that's exciting to hear. And if you want to learn more about that upcoming airdrop, I would highly recommend you follow the Twitter handle for Zeta Markets, which is just Zeta Markets. You should also follow Tristan at Tristan0x. And then if you want to learn more about Zeta Markets, just go to Zeta.Markets. So Tristan, this is a great place for us to close out. Thank you so much for coming on. I feel like this is chicken soup for the DeFi soul. I love reviewing newer protocols. The funny thing is Zeta isn't that new of a protocol, but I think there's a recognition here that like there's been a high growth period for you since fall 2023. So it's great to see builders rewarded for working on something for so long. I think we're always seeing builders and users chasing shiny objects in the space. And for what it's worth, I really admire the approach to risk management here. I think there is a temptation to quickly list any meme coin. I recognize it's a tremendous growth strategy. However, it's a double-edged sword. And so, yeah, that means a lot to me as a user to know that you're not just looking to list the next meme coin, that there's a lot more thought going into that. Can we end, though, with any final thoughts on like how folks can get involved in the protocol, or just maybe any teaser of like what else is coming beyond the token? The token, the airdrop, all of that is exciting. Anything else that you can share?
Yeah, that's a good question. So I think, just generally getting on our socials is great. Jumping in our Telegram chat is also like pretty active these days. A lot of people chatting in there. I try and drop in, time to time and talk to people. So that's good. Any kind of feedback on the platform, I like welcome that with open arms. People criticize or love certain bits of it. So it's really great to hear that on Twitter, people talking about that. So things to look forward to, I guess, on the platform side is multi-collateral, so supporting Sol, Jito, Sol collateral. So you can essentially be long a bunch of, Solana beta and then also be long perps. It's kind of these like coined margined futures that you've seen on centralized exchanges, which I think are very popular. We want to increase onboarding and make that a lot more seamless for people. So not having these kind of seed phrases and being able to log in with Google or Twitter or stuff like that. We've been looking at kind of ways to make that more seamless. We do have really cool stuff, like if you're coming in from cross-chain, you haven't used Solana before, we have an integration with dBridge that we launched a couple of months ago. So you can basically, within a click or two, go and deposit funds from basically any chain and have that within your Zeta trading account within like 30 seconds. So that's really cool. And then obviously the roll-up, which we're going to be building, that should be on testnet Q4, ideally Q3 if we can get it out, but probably Q4. And so I'm super excited for that. So I think keep up to date on the socials. That'll be really exciting. And then I guess my closing advice is, like you mentioned, I think play the long-term game. I think there's a lot of exciting, interesting opportunities in DeFi. My kind of learning or experience, having built through Solana when everyone was kind of against it and thought that it was kind of over, we had probably 100 or 200 monthly active users. It felt pretty depressing, and then you come out the end of it and things start to turn your way. So I think adopting that long-term mindset is really great to see. I've seen other builders go through the same thing. I think the meme was Synthetics had 30 users back in the bear market in their kind of first run, and now obviously they're a kind of juggernaut. So I think, crypto tends to be around these very short time frames, but I think the people that think long-term and try and build real things will definitely ultimately succeed.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.